Hello. Can y'all hear me? Can everyone hear me? Can you hear me? Can you hear me? We have officially started. If you can hear me, let me make sure the comment is on. Can you hear? All right, there we go. Dropper number 1 if you're tuned in. I see 2 people just entered the room. I see that 2 of our, okay, great. Okay. All right. If you are tuned in, drop a number 1 in the YouTube chat box if you are tuned in. I want to make sure that all of us are here. Guys, we're going to be talking about some good stuff today. And I wouldn't even say good, I would say important. No matter which side of the fence you're on, yes for homestead exemption or no for homestead exemption increases. Okay. I want to make sure that we all understand what the bill is actually saying. That is the only point of this entire YouTube segment today. And I'm going to pull the bill. We've already had the bill. I've already reviewed the majority of it. And we're going to do this in sessions. Today is session 1. And I want to make sure whether you're voting yes or no, I'm not here to tell you what to do. I'm here to inform you on what the bill is saying so that you can make a decision based on an informed voter. Okay. So really, what is the bill saying in plain English? Okay. And there are different compartments to what is going on here. Okay. What is it saying in plain English? What do we, what is it that we're even discussing? Okay. So I want to just bring it up. Okay. So the first and foremost thing, okay, is that they would like to increase Florida homestead exemptions. Okay, there is a lot of, I was even tricked. Okay, there's a lot of verbiage saying to eliminate homestead exempted properties, okay, from being taxed. How many people have heard that? We're going to make it 0 if you've been in your house for X amount of years. In fact, they don't even talk about how many years. If you are claiming homestead exemption, we're going to not even reduce, exempt, make 0. Okay. That's one of the things that you've been hearing. Okay. I'm actually going to share this now really quickly. If you just give me a minute. There. All right, I love it. All right, so there we go. Okay, what does that mean? That is not what this bill is saying. So let's clarify this. Your taxes are not going to 0. Okay, we would not be able to manage cities with a tax bill of 0. Okay, or maybe we will. We probably have increases somewhere else, but we'll talk about that a little bit later. And we're going to be here for the next 30 minutes. And this is only part 1. I want to make sure you guys understand this is only part one of this session. There will be more sessions as we get more clarity to the bill, okay? Limiting future property tax increases, okay? What this bill really does, increase Florida homestead exemption. We're going to talk about that and break it down. Limit future homestead property tax increases, okay? Reduce how fast a property can rise in value for tax purposes. I'm really interested on that one. Restrict how counties and cities can spend property tax money, okay? The fifth thing, eventually moving forward to eliminating some homestead property taxes entirely, okay? We need clarity on all that, okay? What are the concerns of the people? Well, you know, we cut here and we cut there. What are we going to do for, you know, police, fire, schools, etc.? Okay? I want to bring you back to a time in 2008, I believe, where homestead exemptions were $25,000. What does that mean, Claudienne? A lot of y'all don't even know how to break this down. So I'm going to help you. And I'm going to use 500,000 as our number because it just helps me to calculate. Okay? If your property was assessed at 500,000, they apply a discount of 25,000, and now your property value for tax purposes, okay, for homestead exemption, we're talking about people who are occupying properties right now. Oh, this even gets better for commercial. Okay, you would now be only taxed on $475,000. The question you should be asking is, how did it even increase from 25 to 50,000 back in 2008 for the same purposes? Inflation, things were going through the roof. They wanted to give homeowners who were living in these properties a break. And so now, fast forward 2026, we are looking at another tax break. They are looking to increase, this is the first one, to increase Florida homestead exemptions from 50,000 to 175, and then eventually increase it in 2018. All this is going to take place not right now today, but I believe the start is January 1st, 2027. Okay, let's look at that right now. Right now, Florida homeowners generally receive, we're not talking about veterans and all these additional exemptions. We are specifically talking about if you live in a home, okay, and you claim it as your primary residence and you apply for homestead exemption because you live in that property, okay, you generally receive right now $25,000 school tax exemption, okay? Then you receive another $25,000 on top of that. That makes the $50,000 non-school exemptions, okay? This bill will increase drastically on January 2027. A lot of people are saying, well, how is it that inflation went from here to there drastically, but the people are not seeing a benefit, okay? I'm not here to tell you what to do. My job is to inform you so that you can make an informed decision whether you vote yes or whether you vote no, okay? So beginning January 1st, 2027, for non-school taxes, and I want to read this. For non-school taxes, homestead exemption increases to $150,000. Okay, that's the first clarity. Beginning January 1st, 2028, the increases again, well, it increases again to $250,000 collectively. Okay. What does this mean? And I'm going to use the 500,000 mark. I'm not going to play around with the numbers and get us all confused here. Okay. What that means is that your home could be worth 500,000, and I want you to take a calculator out. Okay. Up to 250,000 of that value could be reduced by $250,000 at the end of the day. Okay, that could be your exempt from county city taxes. That can reduce your tax bill significantly. Okay, and I'll give you guys an example. You know, I have a homeowner. I didn't even really introduce myself, but we'll talk about that later. I have a homeowner. Well, I've got a lot of homeowners, okay, and a lot of sellers. Okay, right now they've lived in their home for 20 years. And I want to take a break just so that we put everything into perspective. Their tax bill is at $2,500 a year. Okay, their house is worth $500,000. They've been protected by the 3% cap of increases because they have homestead exemption. The house directly across the street sells 8 years later, and that new tax bill for that person across the street, not the value of the same. Okay, it's so it reset. Now that bill is no longer $2,000. You don't benefit, right? It gets recalculated based on the new, not the sales price. I don't care what the system says, because if you bought it in foreclosure for $100,000, guess what? That is not your value, your assessed value. It is going to be based on the appraised value of the community at the time. Okay, so that person's taxes just went to $8,000. Okay, it's only an 8-year difference. Okay, 12 years down the line, COVID happens, prices go through the roof. All of New York, all of California now moves here. They help increase the value. Okay, and what's happening here? What's happening here is that now when that next door neighbor sells, their taxes are no longer $8,000. Their taxes are now $14,000. So I've got one neighbor at $2,000 being protected, and now I have another home buyer who, by the way, thought their taxes were going to be $2,000 because the realtor, the mortgage lender, or the industry just did not teach this space of buyers. But you will have a shortage the following year because they've been in that house for nearly a long time. If somebody has a tax bill of $2,000, I already know they've been in the house a long time. Or it's a veteran and they have all of the exemption and there is no tax bill, only ad valorem. Okay? So I want to go back for a second. The first thing we got to do is get educated. Okay? They're not saying the tax bill is going to zero. They're simply increasing the $50,000 to up to $250,000. Okay? So that's number one. All right? Now, I want to go over this because this is important, I believe, too. I believe that this is important as well. Okay? I don't know if you guys know this, and I haven't heard anything about the commercial side other than, the people who don't have homestead exemption don't care about it because it doesn't apply to them. Or the people who are renting don't care about it, even though they are voters, because it does not apply to them. Okay. Currently, I don't know if y'all remember when we voted on this. It's been some years. Okay. Commercial properties, businesses, non-homestead residential properties can increase right now up to 10% annually. Okay. What this bill is also talking about, okay, January 2027, is that cap also drops 5%. I've heard no communication about, I don't know if it's just me or what. I've not heard anything about the commercial space because all the ads are making us believe, vote yes for no homestead exemption, no property taxes if you live in a property. They're not even seeing where this is only going to apply to seniors. Now I could see where they will be exempt, but it's just math. Okay, how long have you lived in a home and math? All right. So what does this do for the commercial space? Who is it going to be benefiting there? Landlords, investors, commercial property owners, businesses. This bill does not, I repeat, does not only affect homestead exemption properties. Okay? It does not. It also applies to non-homestead exempt properties, but from another angle. Okay? Now, let's talk about this for a little bit because I think this is important. I want to just make sure this is right here in front of me. Because the next issue and concern is, okay, and this is where cities and counties are probably most concerned, because the bill says that property taxes collected by counties and cities can only be used for police, fire rescue, EMS, schools, roads and infrastructure, flood control, retirement obligations, core government operation. This limits spending flexibility. Okay. The big question that we don't know yet, and if they do know, we don't know yet. Okay. We don't know yet is where the money is going to come from. Okay. But I want to back up for a second. Okay. School taxes are not going anywhere. School taxes are still going to apply to the property value just as they do right now. Okay? Just as they do right now. Okay? You may not get the full benefits immediately. We heard that. Okay? This is one of the biggest hidden issues in the bill. Okay? So I want to back up before we go into commercial and all that extra stuff, because some of y'all don't, maybe commercial is not your thing and it may not even apply to you. Okay? But I want to read this. Okay? One of the biggest hidden issues in this bill that I have not heard, okay, we have to get more information, and that's what we're doing here. Okay? That if you become a resident, okay, after January 1st, 2027, you will not immediately, okay, I'm going to read it here. You do not immediately or automatically get full exemption immediately. The bill says new Florida residents may have to wait 5 years before receiving the larger. Okay, let me make sure this is clear. We're not saying you won't get the 50. That's not what this is saying. You will not get the larger homestead exemption right away. Okay? It is proposing that you get the larger exemption in 5 years. Okay? I believe it's because they want to stabilize communities, neighborhoods, and they can't have people bouncing around from year to year, getting all these exemptions. Then what's the benefit? Anybody knows, and I'll just get the monkey out of the room, okay? The unknown out of the room, that when you are invested in the community, you are invested in safety, you are invested in the schools, you are invested in police, you are invested, okay? And so you will not, if you buy after January 1st, you will not see these immediate effects of the larger discount, okay? Okay, you must wait 5 years. So long-term Florida residents will benefit first. Now let's talk about the elderly, okay? Most of our elderly have been in their homes for 30, 40, 50. Most of us have grown up in the same home that your parents own today. And I say that with great confidence because I have sold many homes of long-term, okay, residents. Either they have transitioned and passed on, the kids no longer want the home, whatever the case may be. They are going into a retirement home or they're moving with their children in another state. Whatever the case is, they are relocating, okay? But let's just say they are still in their homes, okay? And their home still is worth, let's just say now, $500,000, okay? they're also going to see a large benefit there. Okay. Now, let's look at this because I don't want to miss this part. Okay. Now, I don't know this to be true or not, but it seems like this is designed to discourage people from moving from Florida just for tax benefits. Okay. So once again, you're not going to be able to buy January 2nd, 2027 and decide you're going to get this large, big discount. No, this is for people who have already been in Florida, who've experienced inflation at a whole nother level, and they are looking for relief. Okay. Based on the bill. Okay. Notice I'm saying based on the bill. Okay. Now, your property tax assessments stay capped. Now, that's something that won't change. That's now, and it will continue on. So for homestead exempted properties, taxable value increases cannot rise more than 3% or inflation, whichever one is lower. Okay. This has always been this way for the last 25 years at least of my tenure as a real estate professional and a homeowner myself. It protects these high spikes in the market space. I gave you an example earlier. Okay. My personal tax bill is about $10,000. Okay. My neighbor who bought 2 years ago is about at $27,000. We have the same property, same square footage. We're both on the lake. We both have pools. It is the same model. They bought in a different time period when inflation was up and property values were up. Okay. So right then and there, when the increases continue to go to $28,000, $29,000, $30,000, they're going to be protected at that $27,000 at 3% increase or inflation, whichever is lower. Okay. Now, we talked about commercial. Nowhere in the bill, well, not going to say in the bill, but in the media, we've addressed some of the commercial. We just talked about it. Okay. We just talked about it. Now I've got my notes written out because I wanted to make sure I didn't miss anything for the first session of what we're talking about today. Okay. And I'm going to get to it. I'm going to skip around a little bit, but I'm going to get to it. Okay. Okay. What are we going to do? Okay. Here's where I am. If cities and counties are collecting less property tax revenue, how will they make up the money? That's been the biggest question. If somebody can tell me where the money for schools are going to come from, if somebody can tell me where the money for police are going to come from, if somebody can tell me where those cuts are going to come from, then I'll consider it. That's a meat and thick of it, right? People want to know where the money is going to come from if there's going to be a cut in terms of property taxes. I believe a lot of those people were led to believe that property taxes were going to zero. That's the first thing. That's not a thing. It is not going to zero. But there's a possibility of higher fees. Okay. There's a possibility of increased assessments. There's a possibility of the millage rate going up. I can't figure out why they just won't decrease the millage rate so that the people could still have a break. Okay. Think about this. Services could be cut. Okay. When you look at a city budget, it is based on several things. And our homeowners taxes are one. Commercial taxes are another. Okay. And I can go on and on, but I think for this topic, it's relative because if there's a reduction in the money that's coming into the cities, where's the money coming from? But I've got a better question that I need somebody to answer if you're tuned in. Okay. A lot of you guys don't go to board meetings. You don't go to your HOA meetings. You don't go to your commission meetings. You just don't even go to the city meetings. Okay. You're not there. You should be, but you're not. Has anybody looked at the budgets of their cities lately? Is there anything in their city budgets right now that can be cut to help fund the schools, to help fund police, to help fund? I mean, I could just go on. I gave them to you earlier. Okay. Is there anything right now that can be cut? I think that becomes a very important question. Are cities mismanaging their budgets right now? That's a real question. Do you even know? Have you looked at your city's budget? Have you attended town hall meetings? Guys, this is important. Made it to the ballot. It is now your decision. Whether you vote yes or no, you must become informed. Okay? We're talking about if we cut, reduce for homestead exemption and now commercial, which nobody's talked about, where's the money going to come from? Why are we not evaluating the budgets up front? Okay? This depends on the voters. Before you go to the polls, I want you to pull this document. It's a lot of pages. And I want you to read it. And what you don't understand, I want you to highlight it. And I want you to start researching. I want you to start attending your city and county commission meetings. This is not law yet. The Florida voters must approve this constitutional amendment in November, and it needs 60% voter approval. Okay? So we're depending on you. Okay? We're depending on you. Any questions before I go on? Any questions? This is only segment 1. I haven't even gotten into the ABC. Like, I did ABCs, but let me tell you, there's a whole nother section to this bill we've got to attack. Okay? So I don't see any questions in the comment section. If somebody can just type something in the comment section, let me make sure that it is working. Okay? All right. A heart, 100 something. Give me something. All right, there you guys go. All right, this is good. Okay. I think the main question that the people want to hear is very simple. If we are doing a cut on property taxes, where does the funding? I want to make sure I don't miss any of these. You pull my notes. I want to make sure I don't miss any of these. Where's the funding going to come from for the police, schools, fire rescue, EMS, roads and infrastructure, flood control, retirement obligations, core government operations? Okay. Will it be an increase in sales tax on your everyday goods? Okay. Know what your sales tax is right now. Will that increase to make up the difference? These are the things that we need to know as voters. Okay. And we don't have those answers yet. Okay. So be very clear. Make sure you're make sure you understand what's going on. Next Monday at 12 p.m., I'm going to take a deeper dive. Okay. I hope I clarified that the taxes aren't going to zero. Okay. 2027. Oh, I have homestead exemption. Here's my document. I've been living in the house for 5 years. Remove my taxes. No, that's not what's going on. They are increasing the 50,000 to 175 the first year, 250,000 the second year, 2028. Okay. And if you buy a home after January 1, you will not see the increase from the 50,000 exemption until 5 years of you living in the home. Guys, does that make sense to y'all? Does that make sense to y'all so far? Does that make sense so far? Okay. The other thing to know about this bill is that it also affects commercial. Okay. Remember, commercial property can increase up to 10% at any given time, in any given, not any time, but every year. Okay. So literally 10%, 10%, 10%. What they are proposing is that we have a reduction for commercial businesses, okay, at 5%. So they're even cutting commercial property taxes. Okay, that's important for you to know. So what we're going to do right now is I'm going to go ahead and end this live. I don't know. I don't see any questions. I do see a lot of people on here, but I don't see any questions on the chat box. I do not see any questions on the chat box. And so if we don't have any questions, what I'm going to do right now, okay, what I'm going to do right now is in the live. Next week, Monday, we're going to take a deeper dive. You entered a question. All right, let me see where I can find the questions. Okay. Oh, right here. Has this thing started or no, not that question, I don't think. All right, here we go. Will the transfer of homestead exemption still exist if you sell and move within Florida? That's a very good question. So right now, what I do know, so the question is, will the transfer of homestead exemption still exist if you sell and move within Florida? Absolutely. Now, right now, what you can do, a lot of people don't know this. This is important. There is something called portability. You can port your savings on your current property into the new property that you buy, okay? And you have about 2 to 3 years, I believe, to do that. So you don't even need to buy right away to gain the exemption, but you can do it right away, okay? So yeah, the answer to your question is, will the transfer of home? Yes, as long as you release the homestead exemption from your current home because you're no longer living there, you can transfer it to the new home that you are going to buy in the state of Florida. Add on to this is important. You can port your portability, okay? You can Google it, go to the county website. You can call and they will walk you through, okay? You can port your savings to the new home as well. So the 50,000 that you would automatically get will increase with portability. Okay. All right. So this was a good session. Did y'all enjoy this session? Do we have a little bit more clarity? Just a little bit more clarity. We're going to deep dive into this next week again on Monday, where we're going to take a deeper dive into what this bill is also talking about, guys. We will be here all day talking about this bill section from section, understanding how schools are funded, understanding how police are funded, understanding the structure of every entity, really. Okay. I mean, it's all right here. It's all right here in the bill. All right. I love y'all. Thank y'all. My name is Claudienne Hibbert-Smith, a real estate professional of over 25 years. I love what I do. I love that I'm able to inform our sellers and buyers, no matter if they're in the commercial world, no matter if they're in the residential space. If you are a seller, you can join us on Wednesday so I can tell you what to be prepared for and what to be looking for when it's time for you to put your property on the market. All right. Okay. So it might be good if you can show and work through a real live example of how the current tax bill works and what the new one might look like. Okay. I didn't prepare to do that, but I will give it to you. Let's say you own a home right now. You've been in that home for 8 years. Your property is going to get an automatic $50,000 deduction off the $500,000 assessed value from the county. So now, instead of being taxed on $500,000, you are being taxed on $450,000. Okay, that's what it is currently, just for homestead exemption. Y'all, it's a lot of exemptions: disability, blind, VA. There are a lot of different disability. Exemptions. Sorry. Okay, widower. There's a lot, but we're talking about homestead exemption here. Are you clear on how it is now? Well, what they're saying is that if you've lived in that house for 8 years, okay, they're in January 1st. That is a real life example. Let me see if I can write on here. I don't know if I could write on here. Okay. Now, I'm going to continue, though, because this is good. If your home is worth $500,000, you've lived in the house for over 5 years or 5 years or more, January 1st, they're going to increase your deductions to $150,000. So now you're only going to be taxed on how much, guys? How much is that you're going to be taxed on? 500 less 150,000 gives you what? Gives you what? $350,000. Okay. Now I know math really well, but I just want to check it and show you guys. Okay. 500,000. That's your property assessed value. Okay. Minus 150,000 becomes your new taxable value. Now in 2028, it should increase. Okay. But now guess what? Your property value increased. Okay. So you're no longer at 500,000. Maybe you went to 525. Okay. Or 550. Your house is now worth 550 the following year. Okay. What they're going to be doing is taking 250,000 off for homestead exemption for your taxable value for living in this property, claiming homestead exemption, and now you're only taxed on the 300,000. The big question is, if we are reducing the income to the cities and the counties, where is the money coming from? What's going to happen to the gap? Okay. What I think a better question is, how many people are claiming homestead exemption that's lived in their house for 5 years? Is it really even a dent, okay, in the income coming into the cities and counties? My bigger question is, are the cities and counties honestly budgeting correctly. Okay, because I see a lot of things that can be handled differently. Okay, and right now we don't got no cuts. We don't have $150,000, $250,000 cut and a 5% reduction in the commercial space. We don't. Okay, are we following me here? So join us next Monday because we're going to take a deep dive. I'm going to be showing real live examples of how these calculations are going to work. Who will it? What are the pros, more cons, and more stats? Okay. I love y'all. Hope y'all learned something today. Next Monday, let me tell you what date it's going to be. We're going to be right here, Claudienne Hibbert-Smith. I may be bringing somebody on here with me, so I'm excited about that. And it's on the 15th again at noon, right? I'll see y'all later.